Good afternoon. Thanks everyone for joining us today for our first virtual Ag Tech conference. Really excited to see the 5 companies that are presenting today. And we of course have a great keynote, which is Steve Hansen, who's an analyst at Raymond James covering transportation, chemicals, and agribusiness and industrials. With me, I have my colleague Jessica Butt. She's going to help moderate, and Tina as well today. So with that out of the way, as always, there will be forward-looking statements throughout the whole presentation. So please check those out on the company's disclosures on their website, and there will be a Q&A component to each session. So feel free to input your questions in the Q&A box at the bottom. And with that out of the way, I'd like to introduce Steve Hansen, who's kind enough to give us an overview of Ag Tech. Hi, Steve. How are you?
Well, Deb, thanks for having me.
You're welcome. So I think you've got a bit of a presentation and you're willing to take some questions at the end.
Yeah, for sure. So good afternoon, everyone, or good morning, depending where you're sitting. So the purpose today is really just to provide a broad overview of some of the key thematics and capital flows and origination into the ag tech space over the last decade. My role at Raymond James is an equity analyst in the public markets, of course, but we do spend a lot of our time with the younger companies that are still in this private sphere and are growing up throughout the space. And I would just note it's been incredibly dynamic over the last decade. We've seen a number of new themes emerge over that time, which I'll touch on, but it's just been frankly, it's a lot of fun and it's very engaging. So I'm quite excited about the prospects here. Just getting into it, the point here, I think ultimately is that we've seen effectively a decade now of capital formation into the space. It's been, as it suggests here, 45% compound annual growth rate over this time period through 2020. 2021 is near complete, of course, and we do have first half data and even third quarter data preliminary that suggests we'll see another banner year this year. It's notable, I think, that we saw, even in 2020, a large step change increase, of almost 40%, even despite the onset of the pandemic. So the point is the opportunity set is being realized now by the venture capital markets in particular. This is private capital flows predominantly. And so, we're seeing a really strong uptrend. And it's just notable here that 2013 was the year that we saw sort of this landmark deal by Monsanto to buy Climate Corp for just under $1 billion. A lot of people attribute that to being really the catalyst to get the sector going. I'll give you some other reference points for some other larger transactions later that suggest it could have been a couple of points, but that often is credited for the start of this big wave we've been seeing. Sorry, and I should mention actually, just for reference, so this categorization of data is really intended to be the broadest capture in the sense that it's both upstream and downstream data. I think most people think of ag tech as more in what I call the traditional upstream, so at the farm level, or maybe as far down as some of the marketing sides into the supply chain, but it wouldn't certainly reach all the way down into the grocery and restaurant marketplace, et cetera. But I just wanted to include that because it is one of the broader descriptions of the space, and there's a lot of debate about how you capture that definition. But so this would be the more encompassing view of the world. A lot of my discussions here going forward now will really focus on that upstream component. So just a couple other, we dig beneath the surface and look at some of the other data that's out there. I think it's notable that the bulk of ag tech deals are still relatively small. Again, even though we've been at it a decade, a lot of the financings are done, at median deal size of $2 million in 2020. You can see the sort of the range of deals by some of the different subcategories here. But this really gives you a sense here, how small those deal sizes are on a median basis. Now, what is interesting though, and this has really been just the last 3 to 4 years, is we're starting to see a lot of what I call brute force bets emerge in the space. And so this is the concept of bringing in, large ticket sizes, $50, $100, $150 million into very early stage companies to really give them sort of that brute force capital to accelerate quickly. And I won't say land grab the space, but, make a really big early mover advantage. And we've been seeing that across a number of different verticals. You can sort of get a sense for it here if you see the shaded bars in behind that give you a sense for, how that influence is on the average size. And I'll touch on a few other elements of this over time. This same trend that I just described, the brute force trend, is also making what we call unicorn sightings increasingly frequent across the landscape because valuations are often pushing or surpassing $1 billion now for these individual companies. So I'll just touch on a few of the emerging themes. I'm not going to hit all of them. To be clear, there's far more than just the ones I'll highlight here, but I wanted to give you a flavor for beneath the surface where some of the funding trends are going or heading. And so I'll touch on a few of those here now. So just to give you a sense, the innovative food sort of theme, if you will, is just the innovative food is a bit of a debate in some respects, but it really captures a couple of key themes that you might think about more directly, which is plant-based proteins and or cellular agriculture, which is a new sort of format to create proteins in the lab effectively. There's been a really strong uptrend in funding for that vertical of late, including right through into 2021. I would note I've got just a few of the highlights here with the headlines. This presentation can be made available, by the way, if you want it afterwards. You can leaf through the different links if you like. But the point is that there's a number of large deals that have come through. Just to give you a couple of quick examples, we've got sort of again, Aleph Farms on the $100 million deal, Good Meat, $267 million deal, and even Perfect Day, which is more on the alternative protein side, not the cellular side. But that's one where even CPP is now involved and is one of the lead investors in the last round. So again, these are big tickets that are starting to come into the space. These are what I call these brute force deals. These are early stage companies with very modest revenue, very modest, but they're raising large sums given the opportunity sets. And a lot of them do really promote themselves as sort of platform type companies that can do a number of things. But again, point is large sums of capital coming in. Controlled environmental ag, or CEA, it's sometimes called vertical farming, comes under a number of different formats or monikers. But again, here, seen a very large uptick in funding here the past couple of years. The bulk of it is still in the private markets, but there are some public companies that are emerging, one which we'll touch on later, I'll note in the presentation. There's been a few that have also come to market via SPAC. And so like App Harvest is one of them. We've got two more that are coming. Local Bounty is one here that's been backed by Cargill. There's been another one just quite recently backed by Cascade or Bill Gates Group that's been renamed. It was Shenandoah prior. They've been just funded now with a couple $100 million as well. Point is this concept of supply chain breakdown and the challenges that we've all been seeing at the grocery store level with food inflation is to basically pull the production closer to source, to the demand source. So the bulk of production today for leafy greens and other products predominantly sits in California, where they've historically had a good growing environment, but the 20-year mega drought is making that really challenging the last couple of years in particular. You're probably all familiar with the number of recalls you've been seeing as well. And so people are looking for real solutions. And indoor ag historically, it had a lot of challenges around economics. Those are starting to get a lot better now with the advent of a number of technologies inside the buildings or the structures, depending how it's the format of the technology, and that's bringing costs way down. So that's been a really strong format of late for new funding, and I expect we'll see a lot more going forward. Just two more I'm going to highlight here. So on the left is ag biotech, and this is a very broad category. So I'm a little bit reluctant to show it sometimes, but like a lot of the new technologies we've been seeing around sort of synthetic DNA technology, a number of different platforms around yeast and I'll just call it synthetic biology to create products. And I say products in a very generic term, but it can be a number of different things, whether it's a specific molecule or other things that can be used in agriculture for insecticides, pesticides, herbicides, et cetera, are now being created in the lab and scaled. And that's sort of the point. Been seeing some big bets here as well as some IPOs. Zymergen's now a public company. Ginkgo Bioworks has just gone public. They're just north of that valuation now. Pivot Bio is a bit more specific around making plants more efficient effectively. I'm simplifying, but and then a number of other companies. So that's seen a lot of uptake of late. Some of these firms, though, I should note, are not just ag focused. So again, these platforms that they've built have the ability to produce molecules for a number of different sectors. It could be the chemical space, it could be ag specific in some verticals or others. So it's a bit hard to compare those ones sometimes because they do have such broad applications, but like a Pivot Bio is actually very ag centric, just for reference. And then this last one is not a big category in dollar terms, but we've seen a number of transactions in the space would have been really interesting of late. And I think we're going to see more of this space going forward. And it's just around robotics and automation on the farm. The bulk of the focus thus far has been in sort of more controlled environments. That's really where a lot of the focus has been. So smaller footprint specialty crop markets in particular. So think about like picking indoor, like picking tomatoes or picking a strawberry or something like that. It's less been in the broadacre crop space as yet, but that is coming, and I'll make some reference to that as well. But just given the labor challenges we're all hearing about and reading about every day, I do think we're going to see this category continue to accelerate going forward. There's been some interesting transactions just of late as well from an acquisition standpoint, which I'll touch on in a moment. So this is a busy slide. I apologize in advance, but the purpose is really just to demonstrate that this isn't all happening at, the private micro level with no participation by what I call big ag. So big ag has been very busy through this whole time period. As I referenced earlier, that acquisition of Climate Corp by Monsanto back here in 2013 is often sort of credited for really getting this sort of like this wave of investment going. But I would just argue that, I think it was more than just that. I think that by itself was really interesting, and it no doubt made headlines. But it was really, as we moved on, there was actually a bit of a period of sort of quiet here, if you will. But once we had the Granular and Blue River transactions take place, it really started to accelerate. Now, part of that was just, capital availability and interest rates and money supply. But, these transactions really did solidify, I'd say, or, get the momentum going at the big ag level for further acquisitions. And so these just chart out a number of the acquisitions that have happened along the way. I'll give you a sense for who bought these groups in a minute, but just to give you a sense, the deal flow has been accelerating. So there's been lots of recent exits along the way. This Bear Flag group is quite recently one of the interesting robotics ones that I mentioned that was acquired by Deere. And I think we'll continue to see this trend continue. The one note I would make, though, is that, a lot of these big ag companies have made big platform bets now. And so they tend to be more tuck-in type acquisitions, building on the platform they've already got established, because most of the big OEMs or large seed input companies, retailers, have sort of made those big bets initially. And now they're looking just to augment those or complement them. Those can still be really attractive exits, of course, and we're talking 50 and 60, $70 million checks. But, I think the $1 billion deals are going to be less going forward, although we did just see one recently, which I'll show you. So this is just another way to describe to you in the earlier slide, who's been buying what and sort of within which vertical, quite simply. So it's not a perfect slide. There's different ways to position this, but it just gives you a sense for, at the equipment level, the major tier 1 OEMs and tier 2 OEMs, what they've been buying or who they've been buying. And just, again, very loosely by the color of the type of the line connecting these groups, you'll get a sense for, if you don't know who they are, what sort of vertical they sit in. So again, as I mentioned, Deere has bought a bunch of groups in sort of, the see and spray space, which is, again, computer vision technology adding on to their complements, Bear Flag Robotics, for example. We did see one large transaction between these two groups quite recently, which is interesting, and this hits on the automation theme I described. So Case has bought Raven. Raven itself had really started to position itself as an automation or even an autonomy play within the ag space, and had made a number of acquisitions to that effect. And so that deal has just happened in recent months here. So we are starting to see some broader ticket M&A happen as well. But the same thing applies beyond just equipment guys, right into the input manufacturers, of course. You're probably familiar with some of these names. I mentioned Climate Corp earlier. If I scroll forward one, these names might also look familiar. So this is moving downstream a little bit, if you will, into the retailers, like the Nutrien that'd be familiar here in Canada, as well as Wilbur Ellis and Winfield. And so everyone's been making different bets along the way. And then I think probably one of the most interesting aspects of all of this broader trend, if you will, is we've seen new players come to the market. And so it's not what I would call the traditional, private equity type groups, because it's very early for that sort of type of investment still, but you're seeing sort of these new strategics, as we call them. So big ag tech, big tech, and the sort of the other strategics. So Telus Ag has been one of the most prolific acquirers recently. If you're familiar, they launched just over a year ago, actually. And they've been very busy. They had made a couple of acquisitions prior to the official launch, but in any case, they've been very active in the space, really focus on data type acquisition stories where they can put together different elements of the value chain. If you're familiar, they've done the same thing on the healthcare side or health tech side. And then you've got some new players that have gone to the public market as well. So I sort of call them big ag tech just loosely. So Farmers Edge, which has gone public here recently in Canada, Farmers Business Network, which is still private, but has done a number of deals. This is the one true tech deal they've done, but they've done a handful of other ones around it as well. And then Indigo Ag might be a name you're familiar with. And I mentioned AppHarvest earlier, having already gone public. So point being, the landscape is evolving, and we're seeing new players come to the market, and that's created a whole bunch of different new dynamics to be mindful of. And don't discount big tech. IBM is the one group I've noted here, but Microsoft and Google and Amazon are all over the landscape, typically not in the acquisition sense, but certainly from the data facilitation standpoint. The IoT benefits to the industry are massive. So this is sort of a secondary derivative of what's been happening. So I described earlier, again, a lot of the big players, the big players, you'll be familiar with doing the acquisitions. But what we started to see now, started to see M&A amongst the smaller, earlier stage companies that are either looking to broaden their position. It could be, broadening their technology footprint, broadening their technology portfolio, or even grabbing additional market share from a geographic footprint standpoint. And so it's typically, we've been seeing this sort of reach, if you will, from different companies. I just highlight a few maybe to give you a sense. Hometown favorite for Vancouver would be Semios. They've been one of the most active groups of late. They've recently acquired AgWorld, which is, by most accounts, a $100 million transaction, as well as some smaller ones, and they've been quite active. Again, it's getting them additional scale, reach across the pond, actually as far as Australia in this case, and then some additional capabilities to complement their existing tech footprint. Another player, Deveron here, which I think is speaking today. Dave and his team have been quite active as well, and they've acquired the Farm Dog data platform. They've vertically integrated into Soil Labs, which I think is a brilliant move, and partnered as well. So, point being is some of these smaller players now are not just going it alone, they're also going out and looking to acquire. I think the one thing is perhaps the most underestimated aspect of ag tech from the company side. This is sort of like from the viewpoint of the companies, is companies underestimate how hard it is to get distribution. It's one thing to create a product, it could be the best product, but if you can't get it to the market or sell it to the farm, it doesn't matter, frankly. And that's, I think it's a really underestimated place, because distribution in ag, generally speaking, is already highly concentrated. And so if you don't have access, it's very difficult. And selling farm to farm is just not a scalable exercise. It can get you some initial traction, of course, but if you really want to scale, you need to have some sort of ability. And that's where it makes sense for some of these groups to get together. It doesn't make sense to have 3 sales teams running around trying to sell like products. So just circling back now on the comments that I was making earlier, this, again, the idea of brute force bets, larger scale, raises coming in as early as Series C and D. We're starting to see some really big valuations shape up in the private markets. These are all still private companies, but they're all on track for, again, well, they're either all theory unicorns or on track to be unicorns in relatively near order. So a few of these might make sense. I've just color coded them quickly just to give you a sense for where they sit in the different parts of the value chain or vertical. Again, ag biotech rings quite commonly. The vertical farming or CA space is another common one here. The innovative food has been probably the most recent addition. We've seen a number of deals, again, in that cellular ag space, which I highlighted earlier. That's been very common. And this last one, digital marketplace, is sort of I'll call it a steady state sector for now. We haven't seen as many deals there of late. Now, again, these are also private companies, but the question is always, if you're not going to get acquired, what is the option, or how do you get liquidity, or what do you do next? And public exits are becoming increasingly common. So I've got a bunch of public company names that are listed here. Some will be familiar, some will not. The Canadian names that are probably most familiar would be Farmers Edge and Cubic Farms. Still relatively small in the grand scheme of things, but still growing. What I think is perhaps most interesting is it's not just in the upstream side, we're seeing it in the downstream as well. Another Canadian company here, Very Good Food, for example, is just one, and there's others not listed here. There's lots of opportunity to get into the public markets these days. It feels like there's just been a lot of capital available. Valuations have been pretty attractive, and there's a few more coming on the SPAC journey here as well, which I mentioned earlier. SPACs have been really prolific, particularly early this year. The wave has really died down, but there still are new ones coming. and ag is a common sort of source of ideas for those guys. Just as maybe a final note, though, I think a lot of people, this is just a personal perception thing, but I think a lot of companies get the idea that going public is the end all and be all. And I would just say, like, it's a great opportunity and it's a great option, but a lot of companies come before they're ready, frankly, if I'm being honest. They're just not ready to be a public company and to be up to the scrutiny of, the realities of being public every quarter and releasing results and living up to those results. Again, it's probably not a perfect statement in its entirety, but just generally speaking, if you look at some of the names that have come to market of late, through the SPAC and other things, App Harvest is here, Farmers Edge is a recent public entity here in Canada. You get the trend direction here that I'm describing. It's not been a perfect opening couple of quarters for a lot of these groups. Cubic Farms has bucked the trend. They've been actually quite strong from a performance and execution standpoint, so they continue to do well. So it is, ultimately you're judged by your performance and execution, but it's just a lot of times they're really excited about their prospects and they put expectations out there that are just too high, and then next thing you know, you disappoint 2 quarters in a row and you've been crushed, and that's a difficult thing to gain back credibility. So just as a forewarning for anyone who might be listening that's interested in something of that venture. And I know that Dave and others who are listening in could comment on this probably more, even better than I from their internal lens. That's it. I think just wanted to give you a good sense for what's going on. I hope that was a good overview. I'm happy to take some questions, Deb, if that's worth the time here for 5 or 10 minutes.
For sure. Thanks, Steve. I really appreciate the overview. If anyone from the audience has questions, feel free to input them. I've got one for you, Steve, and it's something that we talked about earlier today in relation to another company. But how is COVID affecting the sector with supply constraints, with food shortages, things like that? Has there been a significant impact, do you think?
Yeah, the short answer is absolutely, and it would be across the board. There's very few companies that have not been impacted in some format, frankly, and it comes on both sides. There's been positives out of it and negatives. So on the positive side, I think it's created a real urgency around figuring out the food supply chain and how to localize it faster. And so for the indoor growing space in particular, that's been a really important win. And frankly, I think we're going to continue to see that evolution going forward. This is not just, groups wanting to build it closer themselves. This is a demand that's coming from the retailers and the large food distributors across the board in terms of trying to gain better access to high quality supply year round. And that's something the indoor environment can offer. So I think we'll see more of that and more partnerships. On the flip side, I would just note that the cost issue around everything is going up. People shortages are everywhere. Even in the public universe outside of AgTech, it is probably the most persistent theme on all the recent quarterly conference calls. And that's not just people shortages, it's also labor cost it's cost inflation around parts, it's cost on transportation. The recent flooding in the West is not going to help at all with the rails being knocked out, I'm sure. But the point being is COVID has really put a wrench in the supply chain globally, and it's created massive cost inflation across the board, unfortunately.
Yeah, it seems like, especially out in BC, it's one thing after the other right now with the wildfires and now the flooding. You mentioned earlier that one of the constraints for smaller players is being able to leverage a larger network to sell into the farms. Have you seen anyone do this really well? And how can a small company access that kind of network?
Yeah, it's a good question. So there's, it's market dependent because every sort of market has its own sort of way to market. The broadacre issue is probably the hardest because the customers are the most disaggregated. Like if you think about, a couple million farms that are out there, you just can't sell to them each one by one. It's just impossible. So, it's on the flip side, if you're looking at sort of the traditional greenhouse market, well, at least in that case, there's a number of large groups that you can sell into direct that can give you some skill. But I would just say it sort of depends on the market, but you need to understand, I think is the point, is how that distribution system works depending on where you sit in the value chain. And you need to understand who you can partner with or how you can partner with them and make it worth their time. Some groups have been quite successful at it. Others have tried and failed miserably. But I would just say that the ones that have done a good job have typically tried to partner with or get in on a couple what I'll call sort of lighthouse type customers, where there's an immediate credibility gained by being on someone's farm or in somebody's greenhouse. And that sort of credibility that, customer Y has bought into the technology gives you the ability to go to the others and start to get that lighthouse sort of, or that spotlight shone on you. There are other ways to do it. Distributors exist as well. It can be a double-edged sword, but there is an advantage once you're ready to use distributors to scale as well, because it makes it just that much easier. So there's a number of different ways to do it.
Is there any heavy sales groups or anything like that you see kind of like in the pharma business where you can have salespeople for hire?
Well, indirectly, yes. And Dave might be able to speak to it a little bit later, but Dave is an example, sorry, this is at Devron, has got a number of independent agronomists under his platform, and independent agronomists are in contact with the farms every day. And it's not just Devron, but other groups have used that approach in approaching sort of they're effectively consultants to the farmer and trying to help advise the farmer on how to make their practice better, right? And all different aspects of growing. And so if you're able to convince those groups that your technology is really good, they will sell it into the farms that they deal with. That is one approach.
Interesting. I think we've seen ESG as a theme in most sectors. Obviously, this applies to plant-based food, but are you seeing this as a theme in the sector in terms of making farms more green, more energy efficient? Can you speak to that?
Yeah, there's a couple of elements to it. So the short answer is yes, it's very topical. It comes in different formats or from different sources though. So, the one truth for sure is that the public markets are being forced to think about this all the time. So, when less so probably at the retail level, if you have individual shareholders or smaller friends and family shareholders, but once you start to attract institutional capital, so the larger fund managers, they care a lot about ESG. It comes up in almost every meeting now. 5 years ago, when I'd go into meetings, it would come up in 10% of meetings. It comes up in 75% of meetings now. So it's very topical. And then I just think in general, people like the broader public appreciates now the big push that we're seeing, whether it's on just decarbonization, electrification, anything to do with the broader ESG mandate. I do find, by the way, just a subtle point, but a lot of people think of ESG as just E. There is a S and G attached to that no one ever thinks about, the social component and the governance component. And actually, I think the governance component is often forgotten entirely, which I think is a foolish thing to do. So just be mindful that if you're going to pitch yourself as an ESG story, you actually understand what the S and the G mean and how your company is positioned accordingly, because a lot of people forget about that and it can come back to hurt them.
Good advice. We've got about 2 minutes left. I don't know if anyone else has any questions. I can keep going myself. I guess the other question I would have, Steve, is you talked about some of the themes that are playing out right now. Do you see any other emerging themes, or do you think that some of these themes have longer legs than others? Where do you see the sector going over the next 5 to 10 years?
Yeah, I think probably one of the most exciting themes, and I referenced it perhaps indirectly, but it's related to the carbon space. And so, the carbon opportunity in ag is very real. The push by governments, the super majors, even the independents is all very real as well. And it's because there's an opportunity for farmers to have a new revenue stream around developing carbon credits. So this isn't unique to ag, of course. How you generate credits is unique to ag, but there's opportunity for credit formation in a number of other industries. And the value of those credits is on the rise. So I think that's probably one of the most interesting aspects. I don't know if you put that perfectly within ag or in clean tech. I mean, you can kind of debate, where that sits necessarily. Sustainability comes up a lot, but there's a number of firms that are evolving in that space, whether it's in the credit verification side, the aggregation side, the new marketplaces, even just the soil sampling that's critical to all of this is a really important aspect of it all. So there's a number of different ways and parts of the value chain where opportunities will exist there, but that's probably one of the most prominent themes we've seen just in the last, we'll call it 6 months.
Okay, great. And I had one audience question that I think we're going to have to wrap this segment. So with all these changes, is waste being reduced in food production?
Yeah, that's a great question. I didn't touch on that aspect of it all, but there's been a number of companies that have been funded in the food waste space. So in different formats. So part of it is just repurposing waste into other uses, other food ingredients as an example. You're also seeing food waste being used as another food source for the indoor farming of insects, which is really just another alternative protein story. So, rearing things like black soldier flies, mealworms, and other things off of typically food waste to ultimately be used as a fish food or a chicken food of some sort. So there's a number of different ways to try and I think reuse unused product or off-spec product and that kind of thing. So I'd say it's prominent. It's probably not the biggest theme, but if I'm just thinking across the landscape, I can think of probably a half a dozen companies that I know that have been funded in the space to take advantage of that food waste, because it's obviously a huge problem.
Interesting. Well, it is a huge problem. It's nice to see people finally starting to solve it. I think that's all we have for time, Steve. Thanks so much for the overview. Really appreciate it.
Yeah, pleasure.
Yeah, have a great afternoon.